This is Andrew Stotz of Stotz Investment Research to talk about watching the street in Malaysia. This product looks at the consensus recommendations, earnings forecast, as well as target prices for companies in Malaysia. Now, if we start with consensus recommendations, what we can see is bottom-up country relative consensus recommendations. The chart on the right shows us that Malaysia hasn't been a buy in Asia for the past 5 years. Analysts are now negative again after being relatively positive in 2015. Fraser and Neves Holdings is one of the oldest companies in Malaysia and is a company with the most positive recommendations. It sources 63% of its revenue from dairy products and is the number 2 beverage company in the world. Now, companies with the most negative recommendations are on the right-hand side, and one of those is UMWS, which mainly earns its revenue from the automotive segment. They've got brands such as Toyota and Lexus, and they're currently challenged by the economic conditions. Finally, if we go on to the consensus earnings estimates, we can see here that analysts have been conservative with EPS growth estimates, but earnings have fallen each year from 2013 to 2015. Now, for 2016, EPS is expected to grow by 11%. Companies with the highest consensus EPS growth estimates are on the left-hand side, and we can see MYEG develops electronic government services in Malaysia and private enterprise solutions. Buying the stock 4 years ago would have given you a 10-bagger, and analysts expect continued high growth. Now, on the right side, we see companies with the lowest consensus EPS growth. SIME, GENT, and UMWS are all diversified companies and are expected to see earnings fall in 2016. Finally, consensus target price, and we can see right here that analysts' upside expectations have basically always been negative. Analysts are now expecting a 3% upside over the next 12 months. And note that analysts were fairly accurate in 2014. Companies with the highest consensus target price expected return, well, the top one is Top Glove, which is the world's largest rubber glove maker by annual production capacity, and its share price tripled in 2015, benefiting from a strong US dollar versus the Malaysian ringgit. Now, companies with the lowest consensus target price expected returns, one of those is British American Tobacco Malaysia, which has about 60% of the Malaysian tobacco market, but is challenged by the illicit cigarette trade. Want more of our research? Well, just sign up for our free newsletter at becomeabetterinvestor.net/join.